Look, when it comes to the energy system, there are reasons to be optimistic. In the fullness of time, an awful lot is possible because of technology, because of other things, when the right sort of price signals are there. And if there is anything that is sort of positive about the current situation, is that it's been a moment where people across society, sort of policymakers, are confronted once again with the idea that energy is crucial to the economy and to our way of life. And particularly over the last 10 years, maybe even the last 20 years, we've been relatively abundant in energy. Oil prices have been, volatile, but on the whole, very manageable. We've definitely been abundant in natural gas. And so, because the traditional energy was just, trolling along just fine kind of thing, and we didn't need to worry too much about it, there's been a huge focus on net zero, very ambitious plans, particularly in Europe, but in a way that, always struck me as sort of a little sort of uncoordinated. How do we transition from the old energy system to the new energy system? It lacked a degree of coordination. And at the moment, I think what you're clearly seeing is somewhat of a reassessment on how do we coordinate near-term concerns around energy security with long-term ambitions for energy transition. And the current situation is a huge catalyst to make that much more coordinated. In the fullness of time, I would fully agree with you. An awful lot is possible. It's just that we need to kind of manage it in the next couple of years to avoid unnecessary volatility.
Martijn, if we look at a company like Shell, on a one-year view, you've made 40%. Year to date, you've made 18%, shall we say. My question would be, given that you believe that there is still a lot more of this story to play through, and we might see the headline price continue to rise through the rest of this year, what further upside is there in an integrated oil business like Shell or BP or some of the other continental European companies? And are they the best way to take advantage of this story in your analysis?
I would say European majors have a lot going for them. In the near term, they clearly generate a large amount of cash flow as a result of high oil prices, high gas prices. But I would also argue that it's becoming progressively clear on how those companies are going to drive the energy transition forward. Now, at the moment, there is a particular valuation dynamic at play, which is the following. The market values these oil majors overwhelmingly based on the money they distribute, primarily dividends. If you go back to business school days and you learned about dividend discount models, I think many of us looked at that. Really, dividend discount models? But that is what oil majors are in the market. They reflect the present value of their future dividend stream. But we've ended up in and the reason for that is that investors look at the money that is retained within these companies and say, well, how are you going to allocate that? What are returns? Like, money you give to me, I value that. Money you retain, we're not so sure about it. The market is expressing a somewhat skeptical view. But as time goes by and many of the new energies business models become clearer, I would strongly suspect that the market would start to regain a degree of confidence that money spent on hydrogen and biofuels and renewables and EV charging and like all of that type of infrastructure will be money well spent.